I always take you for a bit more on the hawkish side of the inflation story.
That's fair.
Imagine that's still a little bit the case here. So would you say that markets are wrong to shrug this off, or do you understand that maybe this is becoming a moment of a little more cyclical nervousness?
Well, I think this is just a point in time where inflation has come off quite a lot, right? So we were running 0.5 and 0.6 per month on core CPI last year. We got 0.2s in June and July. I think people were really eager to say, okay, inflation is done. And we're back up to 0.3, but it's still not 0.5 or 0.6. So I think it's not so bad that it's going to force a change in the Fed outlook.
You still don't think it's going to force. So what is the outlook at this point, that they're basically done?
Well, I think they're going to skip in September and then revisit at the next meeting on November 1st. I have one more hike at that November meeting, but I think the markets are kind of split evenly on whether that's going to happen.
And you watch the reporting from our Steve, from Nick Timmeros, you watch the Fed language, and Steve signaled this last week that they're starting to kind of come down from, it seems like the erring on the side of caution for Fed officials is no longer erring on the side of more hikes, maybe erring on the side of pausing. So if that's true, is that because of the moderation we've seen, for instance, in the monthly jobs numbers, that kind of thing?
Yeah, I think, well, the lower inflation numbers have certainly given them a little breathing room, and now it's a matter of also seeing if there's a follow-up on the economic side. I mean, one thing that's been kind of interesting, and Chairman Powell and others have discussed it, is that even as the inflation numbers have been softer, the real economy has done quite well, right? So, you know, you've had good GDP numbers the first half of the year. It looks like Q3 is going to be very strong. The job market has moderated, but it's still quite healthy. So the Fed is actually, I think, looking for more of a moderation on the real side of the economy, and that's going to play in just as much as inflation to what they do.
And to our Steve Leisman, Steve, one of the things that strikes me about the data lately is you can almost pick any data points to tell your story because you have a set of data points pointing to a slowdown, payrolls. You know, I mentioned the GDI, the income side of things this morning. The St. Louis Fed's now cast as negative. On the other hand, the Atlanta Fed still over 5%. There's Bill Gates leading the AI meeting, by the way, declining to speak with reporters waiting outside. So it feels like both camps can tell a story, and that means, I guess, that we don't have enough information now to see which way this breaks.
No, and I think that's the way the Fed is breaking in terms of, hey, there's some stuff going on right now. There's this surge in energy prices that, you know, I think if you ask a Fed official, they tell you this. I don't expect oil, the price per barrel to go up $10 every month, but it did go up. I think it was 82 to 89 or whatever it was. And by the way, a lot of that may not have been in the August number, so there may be worse to come. I want to go back to what you said earlier. I do think the Fed would like to stop here. That doesn't mean they will stop here. I think they would like to stop here and kind of see what those 500 basis points of interest rate increases has wrought when it comes to the economy. But I don't think that they know that for sure. And I think you're going to get a couple more months of data. And my new thinking on this, Kelly, is it would take a good amount of bad news to get the Fed to hike again. But I'm just thinking that if they do hike again, one might not be enough. I just don't know what a quarter point does if indeed they're in a situation, for example, of rising inflation again, or they feel like they haven't done enough. I don't think one more quarter is going to do it. I think you could probably be in for an additional 50. But just to say that, the bar for getting there is pretty high. If the Fed, I think, gets to a point where they're going to be hiking more, I think they'll hike more than once more.
Yeah, Stephen Stanley, I kind of take the point. I mean, this is the case the Bears have been making, which is that either the economy slows down or it doesn't, and then the Fed keeps hiking. So that one way or the other, you kind of get to this outcome. Do you really think a Goldilocks soft landing scenario? And I've read what Goldman says. I understand the case they're making, but do you think it's really possible? It's
possible, but it's threading a needle, right? We haven't seen it successfully pulled off very often. I think that we've, as I said before, we've had a lot of progress on inflation, but I think from here to 2% is going to be a tough road, and the Fed's going to have to be vigilant as well as patient.
Last question to you. If you had to kind of rank the data right now, what's number one, number two, number three for the markets in terms of moving the needle, do you think?
Well, I think inflation still has to be number one. But for me right now, number two would be the consumer, because the consumer was very strong in June and in July. So you'd expect to see a slowdown in the consumer in the next few months, especially with the student loan repayments coming into place and all the rest. And if we don't see that, then I think that's definitely a sign that the economy has a lot more momentum than we thought.
All right, we'll leave it there. Mr. Leisman, quick final point.
Yeah, I would just add rental and shelter prices. I think that
True.
could solve a big problem in a big way for the Federal Reserve if 1/3 of the index starts to come down in a more meaningful way.
Yeah.